Welcome to Cambridge House Live. I'm Vanessa Collette here at the 11th Annual Silver Summit in Spokane, Washington. I'm joined by Phil Baker, President and CEO of Hecla Mining. Welcome, Phil. Great to have you here with us.
It's good to be here.
Phil, you made a big bet on Horizon Mines earlier this year. How's the integration going so far?
It's going well. Horizon, the Casa Berardi mine, has been a mine that they operated for the last 7 years now. It's a well-run operation. We're certainly going in making changes. We think there'll be some improvements that we can make, but it's going well. In fact, so far I would say each month that we've operated, we've only had 1 month where we've had negative cash flow, so that's pretty remarkable.
And what was the rationale for choosing Horizon and why then?
Well, in 2007 we actually tried to buy Horizon and made an offer. Unfortunately, we weren't able to come to a deal. We stayed in contact with them. Then they had a hostile bid and came back to us and said, would you like to do something now? And it was, we think we got a great deal.
So that's the counter offer you got from Alamos.
Well, they made a bid, a hostile bid, and then we came in as the white knight.
Excellent. You had a big setback last year with the shutdown of the Lucky Friday mine. Where does it stand now? So
in 2012, we spent the whole year rehabilitating the shaft from surface, and it's a 1 mile deep shaft. There's only one other shaft in North America that's deeper. So that was quite an undertaking to get that put back into really pristine condition. We finished that at the beginning of this year, and then we spent the most part of the first half of the year going in and rehabilitating the mine. We did about 13 miles of rehabilitation of the haulage ways, putting everything into really perfect condition. Then we restarted production and we're in full production today. So that's going quite well. Next year we'll see the mine at its normal 3 million ounce rate. And we have begun the deepening of a new shaft that's going to take us another 4,000 feet deeper, allow us to mine for another 50 years. So have you fully recovered financially from that closure? We actually were fortunate because of the strength of our mine in Alaska, Greens Creek. We never really felt any financial stress. We have a very strong balance sheet. At the end of the second quarter, we had about $300 million of cash on the balance sheet. This has not created a problem for us. Just with how the sector's been, it must be very attractive right now for you to contemplate going out on a shopping spree. Where do you currently stand on acquisitions, M&A? So we're in an ongoing process of evaluating companies to either invest in or to acquire. In 2012, we made 15 to 20% investments in some junior companies. We're continuing to look at those opportunities, but we're also looking at additional acquisitions on top of what we did with Horizon. We do think that this is the time to maybe pull back a little bit from the work on our own assets, because we have those in hand, and look at bringing new assets into the mix. And so we'll continue that process, and we've got a balance sheet that we can really sort of take on a lot of new things. When you start looking, do you have any specifics on the kinds of projects that you would want to be acquiring? We actually have a pretty broad mandate for what we can do. We're ideally we'd love to have silver assets, but it's important that the assets be of high quality. So we're also looking at gold assets. There's a bigger inventory of gold opportunities than there are of silver opportunities, and we're not going to, unless there's a strategic reason, we're not going to acquire an asset that's of a poor quality. So expect us to be open to both, and we're really looking throughout the Americas. We, for about a 10-year period, we were the largest gold producer in Venezuela.
Oh, wow.
Tough country to operate in. We were very successful. We sold that interest in 2008 when we acquired a mine in Alaska. We had concluded that the outlook politically was bad, and in fact the company that acquired the asset from us had it expropriated. Wow. But we're prepared to go into other parts of the Americas.
What was your strategy behind the $500 million
bond offering? Yeah, so when in acquiring Orezon, we really wanted to have as little dilution as we possibly could have. So we had the ability, we have an asset quality, we have the mine lives that will allow us to put on this bond. It really is a strategic advantage that we have in this space to be able to access that market. And so in looking at acquisitions, we consider, can we use debt to make those acquisitions rather than equity?
I'd like to talk about your investment into Brixton Metals. What was the strategy behind that, and why was it that they're the only junior exploration company that you publicly put money into?
No, well, we've actually done 3 different exploration companies. Okay. So another one, Dolly Varden, is another one that we have a 20% interest in, roughly 20%. All of these assets are assets where they're not yet developed far enough where they're ready to be a mine. There's still a lot of work to be done. And rather than taking on all that risk, we made the decision to make the investment in those junior companies. At some point, we hope that we'll come to the conclusion that there's a mine to be developed, and that's what we do. We develop mines, we operate mines, and so you'll see us change the strategy with respect to those companies and potentially others when they're at that point of development.
I'm assuming that you're bullish on silver, but what's your overall outlook on the commodity?
Sure. No, we're absolutely bullish on both gold and silver. Clearly, we're in a period of time where you've seen this pullback. You know, gold is down 35% from its highs, silver's down about 60%. Whether we've reached the bottom of that pullback, it's hard to say. Certainly, there seems to be a lot of players, speculative players, that would like to see the prices of both metals go down further. And so we're building our business to be able to withstand that, should that occur. But we're also building the business for when that turns around, because it will turn around. It's going to turn around in a dramatic way. And you think about the monetary easing that we've had and the amount of currency that's now in the marketplace, and you think about the fact that this currency is not turning over very quickly. People are not spending money. The U.S. government, the other day when it had a limit on how much debt they could raise, there was actually 5 companies that had more cash than the U.S. government had. They're not spending that cash, but they will. And when they do, that's when you're going to see this inflation. And the government is going to want to pull that money back in. And we're convinced that that's going to be very difficult politically for that to occur. And when that happens, you will see the gold and silver price explode. And Hecla in its history has, on 2 occasions, had the best performing stock on the New York Stock Exchange of all the companies, 1979 and 2002. And we think when that happens, when you have that explosion, you're going to once again see the stock of Hecla perform in an extraordinary way.
Now, Phil, have you ever considered any hedging strategies specifically to lock in some of these low silver and gold prices for 2 or 3 years?
Our hedging is twofold. One is we hedge our base metals. So we produce lead and zinc. About 25% of all revenues comes from those metals. We don't hedge our gold and silver because we have that hedging of lead and zinc, and we have a very strong balance sheet. So prices fall, we can rely upon that balance sheet in order to protect us. We can also, with the hedging that we do of lead and zinc, we actually cover all of our costs of production. So the operating costs are covered. So the only thing that's at risk is really our capital programs, our exploration programs, and the cash on the balance sheet can cover that.
And just as we wrap up, I want to touch on San Sebastian, which is a project you're developing outside the U.S. and Canada. How is it going, being, you know, outside of North America again?
Well, you know, as I said, we were in Venezuela for a decade. We've been in Mexico for almost 25 years now. Where San Sebastian is located, we actually operated a mine there for about 6 years. We've been in exploration since. And that exploration has gone extraordinarily well over the last 3 years. We have essentially tripled what we had 4 years ago with that exploration. We're in the final stages of the exploration, at least this initial exploration. What we're now doing is evaluating how we're going to develop that asset. Now, as I said earlier, we've pulled back from advancing these things as fast as we can, because there is the opportunity to bring new assets into the company. But San Sebastian, I'm convinced, will be developed sometime, and it probably will not be that far off before we make that decision.
Excellent. Well, thank you so much for your time and joining us today, Phil. It was a pleasure, and we'll definitely be watching Hecla with interest.
Okay, thanks.